Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in financial filings. Today we're diving into the shareholder report for Jensen's investment funds. But it's not just about numbers, it's about what those numbers tell us about how they're managing your money, especially after a busy year with some interesting changes. This is a deep dive into the company's performance and financial health, focusing on their shareholder report for the year ending May 31, 2025. We'll look at how the funds performed, what drove their results, and the key financial stats that matter most. Let's start by looking at costs. For a typical 1,000 investment in the Jensen Quality Growth ETF, the costs were pretty small at just 47 or about 0.57%. That's a good sign that they are keeping a lid on expenses for this fund. Now for performance. The Jensen Quality Growth ETF saw its performance helped by not having too much money in energy and real estate sectors, but it was held back by having too much money in information technology, industrials, healthcare, and material sectors. Basically, they were betting on certain areas that didn't pay off as much as they'd hoped in this particular period. What's really interesting is their strategy to focus on high quality companies. They had about 51.9% in the S&P 500. This focus on quality, which usually means safer investments, actually hurt their returns this year because invested in the S&P 500. This focus on quality, which usually means safer investments, actually hurt their returns this year because invested at Chivera period. What's really interesting is their strategy to focus on high quality companies. They had about 59% in the S&P 500. This focus on quality, which usually means safer investments, actually hurt their returns this year because investors were more willing to take risks. Looking at the numbers for the Jensen Quality Growth ETF EV, it had a total return of 5.56% since its start on August 12, 2024. This compares to the S&P 500 Total Return Index, which saw 11.83%. So the fund definitely underperformed the market this year. Let's quickly check out some key statistics. The Jensen Quality Growth ETF has 66,509,335 in net assets. It holds 28 different companies. The advisory fee paid to the managers was 288.7809, which is part of that expense ratio we saw earlier. The portfolio turnover rate was 17%, meaning they bought and sold about 17% of their holdings during the year. This is relatively low, suggesting a buy and hold strategy. Their top investments are pretty concentrated in big tech and established companies. Microsoft makes up 8.7% of the fund. Intuit is at 7.3%. Marsh McLennan is 6.9%. Stryker is 6.4%, and Apple is 5.4%. This means the fund's performance is heavily tied to the success of these few major companies. Moving on to the Jensen Global Quality Growth Fund Class I, this fund had costs of 108 or 1.02% for a 10,000 investment. This is higher than the ETF and for a global fund that might be expected. For this fund, performance was boosted by having too much money in consumer discretionary and information technology sectors and not enough in energy materials and real estate. They also did well picking stocks in consumer discretionary, information technology and financials. However, they were hurt by having too much in consumer staples and industrials and not enough in financials, communication services, utilities and healthcare. So they had some good picks and some not so good picks. Just like the ETF, they also had a big bet on high quality companies with about 52.87% in top rated companies compared to about 31.79 Pagefields, communication services, utilities and healthcare. So they had some good picks and some not so good picks. Just like the ETF, they also had a big bet on high quality companies with about 52.87% in top rated companies compared to about 31.79% in the MSCI, so not induct enough. This focus on quality once again hurt their relative returns because riskier assets did better. For the Jensen Global Quality Growth Fund Class I, the annual average total return was 11.9% for the year and 10.89% for the year and 10.18% DUF 12.30%. The benchmark MSCI Net Total Return Index returned averaging net total 30%. The benchmark MSCI Net Total Return Index returned an average of 12.30%. The benchmark MSCI Net Total Return Index returned 1.99% since inception. So again, the fund lagged its benchmark, but the returns themselves are not terrible. This fund has 63,001,2444 in net assets. It holds 37 companies. The net advisory fee was $325,009 and portfolio turnover was 23%. The top holdings are also globally diverse. Microsoft is 7.1%, Taiwan Semiconductor is 5.1%. Aon is 5%, Compass Group is 4.7%, and Amadeus IT Group is 4.5%. Again, it highlights a focus on large established companies. Next up is the Jensen Global Quality Growth Fund Class J. The costs here were 132 or 1.25% for a 10,000 investment. This is the highest cost class we've seen so far. The performance drivers and strategy are identical to the class I share, which is typical. The Class J shares returned 10.77% for the year, which is slightly lower than Class I. Over 5 years, it's 10.63%, and since inception, 12.04%. It's trailing the benchmark here as well. Now let's look at the Jensen Quality Mid-Cap Fund Class I. The costs for this fund were 83 or 0.82% for a 10,000 investment. This is more reasonable than the global funds. The performance here was hurt by having too much in consumer staples, healthcare, and consumer discretionary sectors, and not enough in financials, utilities, and information technology. They also struggled with specific companies within consumer discretionary, information technology, industrials, and financials. Interesting 2024 election and tariff policies significantly impacted market returns and the fund's relative performance. They believe that during uncertain times, high quality stocks usually do better, but then after a tariff pause, the market rallied and those high quality stocks underperformed. This clearly shows the fund got caught in a market shift. For the Jensen Quality Midcap Fund Class I, the 1-year return was 3.35%. This is quite a bit lower than the benchmarks. Over 5 years, it's 11.836% compared to the fund's 8.26%, compared to the fund's 8.29% over 10 years. The Russell Midcap Index also did better over 10 years at 9.26% compared to the fund's 8.29% over 10 years. The Russell Midcap Index also did better over 10 years at 9.26% compared to the fund's 8.29% over 10 years. A Russell Midcap Index also did better over 10 years at 9.21% over 10 years. The Russell Midcap Index also did better over 10 years at 9.26% compared to the fund's 8.29%. So over the longer term, performance has been a bit weak here too. This fund has the largest net assets at 1531,1994. It holds 35 companies. The net advisory fee is quite significant at 11.253301. Portfolio turnover is 25%, which is higher than the others, suggesting a bit more active trading. The top holdings are interesting. LabCorp Holdings is 4.6%. Broadridge Financial Solutions is 4.5%, Encompass Health is 4.5%, Equifax is 4.4%, and Viva Systems is 4.2%. These are in the mid-cap space and seem to be more in the healthcare and business services sectors. Now, the Jensen Quality Mid-Cap Fund Class J. The costs here are 107 or 1.05% for a 10,000 investment. Again, the performance drivers are the same as the other classes. The Class J shares returned 3.116% for the year, much like Class I. Over 5 years, it's 11.56%, and over 10 years, it's 8.06%. They're trailing the benchmarks by a similar margin. Finally, the Jensen Quality Mid-Cap Fund Class Y. The costs here are 81 or 0.80% for a 10,000 investment. These are the lowest costs we've seen for the mid-cap fund. The performance is very similar to the other classes with a 3.43% return for the year. Looking at the total net assets for the Jensen Quality Growth ETF, they are at 66,000,9335. For the Jensen Global Quality Growth Fund, it's 65,09344 across both its classes. And for the Jensen Quality Mid-Cap Fund, it's a much larger 153,919,994. This shows the mid-cap fund is the most popular or has been around longer, attracting more investor capital. Let's look at the balance sheets. The Jensen Quality Mid-Cap Fund has 15,392,33941 in investments. Total assets are 153.8. Liabilities are relatively small at 19,634,4. This means the fund is in a solid financial position with very few debts. The Jensen Global Quality Growth Fund has 652,619,555 in investments. Total assets are 653,647,62 and liabilities are only 635,118. Again, very healthy with minimal liabilities. And for the Jensen Quality Growth ETF, investments are 6665 Horan and OSER. Total assets 6650562222 and liabilities are 3626505622 and liabilities are 36222 and liabilities are 3622287. This ETF is newly established as it started operations in August 2024, so its financials are very new. The auditor Cohen and Company Limited gave their stamp of approval stating the financial statements present fairly in all material respects. This is standard but important to note that an independent auditor reviewed every. Looking at the operation statements, the Jensen Quality Mid-Cap Fund generated 2,524.4952 in dividend income and 1310 false 256 alf O's F Al's O's NTO 433 leading to net investment income of ED 52971. For the Jensen Global Quality Growth Fund, dividend income was 747,151 and interest income 29,160. 311. Net expenses after waivers was 617,173.11. Net expenses after waivers was 617,175, resulting in net investment income of 1591 all. The Jensen Quality Growth ETF had dividend income of 63,949 and interest income of 24988, totaling 655,937. With net expenses of 287,943, this fund had net investment income of 367,9943. This fund had net investment income of 365,994. Now, about the gains and losses, the Jensen Quality Mid-Cap Fund saw a net realized gain of 17,864,498. However, unrealized losses brought that down. The Jensen Global Quality Growth Fund had a small realized gain of 933.4, but a significant unrealized gain of 65 times same only 18. The Jensen Quality Growth ETF actually had a net realized loss of 335.23 for its short operating period. For the Jensen Quality Mid-Cap Fund Class J, net assets are 2778079. Class I has 534678844 and Class Y has 53467888854 and Class Y has 735.46, 1845.061. The net asset value per share for Class J is 18.52, Class I is 18.4 for you, Class I is 18.448, and Class Y is 18.422, Class I is 18.48, and Class Y is 18.44. For the Jensen Global Quality Growth Fund Class J, net assets are 2475806. Class I has 30692.81 and Class Y has 509.956157. Share prices are around 17.65 to 17.67. Share prices are around 17.65 to 17.67, Dave. As expected, the ETF has one net asset value of 665.09335 and a share price of 26.29. It's important to note the ETF is much newer and its share price is higher. Looking at total return for the Jensen Quality Mid-Cap Fund Class J, it's 316% for the year. Class I saw a 335% return and Class Y saw 3.3%. These are positive but modest returns. The Jensen Global Quality Growth Fund Class J returned 10.77% for the year. Class I did slightly better at 11.09% and Class Y at 11.03%. These are solid returns given the market context. The Jensen Quality Growth ETF posted a 5.56% return. This is for a shorter period since its inception in August 2024, and as noted earlier, it trails the S&P 500. In terms of share activity for the Jensen Quality Mid-Cap Fund, they saw significant redemptions across all classes, most notably a net decrease of 20,12977 shares for Class I. This tells us investors are pulling money out of this fund. The Jensen Global Quality Growth Fund also saw a net decrease in shares, Class J down 15,334 and Class I down 254 and Class I down 2572 of 222,000 on 3,000 point mide on Ice all and 500 and adds a 51 shares on Ikading fighting Proit Efa and Quate and the new Jensen Quality Growth ETF saw a net increase of 25,000 shares, which makes sense as it's in its growth phase. It seems Charles Schwab & Co. Inc. and National Financial Services LLC are major holders in the Jensen Quality Mid-Cap Fund. Pershing LLC holds a massive 81.2% of the Class Y shares for the Jensen Quality Mid Cap Fund and 90.42% of the Class Y shares for the Jensen Global Quality Growth Fund. This level of concentration with one entity could be a risk if that entity decides to move its assets. The Jensen Quality Mid-Cap Fund and Jensen Global Quality Growth Fund have lines of credit with US Bank for up to $12 million and $7,900 respectively. These are mostly for short-term needs if they have to deal with a lot of redemption requests, and thankfully they didn't have any outstanding balances as of May 31 through 2025. The report also touches on recent market volatility due to economic, political, and global factors, including inflation, geopolitical conflicts, and recession worries. They acknowledge these can impact fund performance, and that's a pretty crucial point for any investor to consider. There's a significant leadership change mentioned here. Eric Skonstein, a top executive at Jensen Investment Management, retired and sold his shares back to the company. This triggered a change in control of the advisor, which automatically terminated the investment advisory agreements. The remaining team will continue to manage the funds. Robert D. McIver now owns 38% of the advisor. This kind of transition can sometimes introduce uncertainty, but it seems they've managed it smoothly with a new contract approved by shareholders. So what's my take on all this? Jensen's funds are clearly focused on quality companies, as their names suggest. This strategy is usually a good long-term play for stability. However, this past year, the market favored riskier assets which hurt their relative performance when compared to benchmarks like the S&P 500 and MSCI ACWI. The Jensen Quality Mid-Cap Fund especially seems to be struggling with performance and has seen significant investor outflows across most classes. The higher concentration of assets managed by entities like Pershing LLC in some classes is also something to keep an eye on. The ETF is new, so its performance is still developing. Overall, Jensen's funds seem to be managing their costs well, but their investment style, which heavily favors high-quality companies, didn't align with market trends this past year. The S&P 500 and MXAPI. The S&P 500 companies didn't align with market trends this past year. They are sticking to their guns on quality, which could pay off in the future, but means they might underperform in risk-on environments. Alright, that's our breakdown of Jensen's latest shareholder reports. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.